let us take a look at what's going on in the stock market. Why? Because these are trying times right now. And they are trying times because what we want to do here is we want to make sure we take advantage of this market. Now, what's actually going on overall in the market? Well, right now, the story, and it's always about the story is that we do not want any rate increase. One. Two, we do not want the Fed to stop cutting rates. That's it. That's a story. We want rates to go down, down, down. So any indication that whether or not we're going to have a problem is going to be dictated by what the Fed is going to do. So, for example, for today we want to hear what's going on with PPI. Any indication as to whether or not the Fed is going to lower. So, if the economy is doing great, it is not good because then the Fed is not going to lower the rates. Why? Well, because they lower the rates, obviously it's gonna prop up the economy. And according to some people, the economy does not anymore propping up. That's the story right now. At the end of last year, the story was, this is fantastic. We have the Trump trade. We're going to be doing great. Earnings are fantastic. This is going to be the Magnificent Seven all over. And we're going to keep on going and going and going. And all that needed to happen was the Fed to say, oops, you know what? We're not going to do forecasts. We're going to do two cuts. How do you make money in this market? Well, the way you make money in this market is that you educate yourself. Educate yourself to understand now what's going on. You do not trade the stock, you trade the story. And you need to understand what that story is about. How we're going to do about it? Well, we're just going to go in and we're going to look our stock one at a time and understand them. We're going to look at SPY, the way it trades. We're going to look at QQQ, how it trades. We're going to look at Tesla, obviously. We're going to look at VMC. We're also going to start looking at quantum computing because that took a hit recently and there's life into this thing, believe it or not. Okay, so no further ado, we're going to look at all these four things. We're also going to look at the news around what's happening. And in the meantime, we'll get some information about what's going on with the PPI today. That should give us some indication. Wall Street for higher open. Large cap US stock may not be worth buying for a decade. For a decade, we shall see. Okay. So what do we do? What we're going to do is, first of all, let's focus on our first name, which is QQQ. Now, QQQ has been, I believe that I've said it once before, but basically, QQQ is highly, highly correlated to what's going on with rates. Okay. And you could see since December, something is going on. I mean, throughout the year, right, from August, you could see QQ, but QQQ is basically Invesco, which invests in some of the largest. Okay, you want to see what Invesco is about? Okay, this is what they do. So you're talking Apple, Nvidia, Microsoft, Amazon, Broadcom, Tesla, Meta, Alphabet, and Costco. Okay, these are our guys. How is the name trading? Well, as you could see, since August, it has been doing just fantastic. It's been going up and up and up. Why? Because of the fact, now keep in mind, all these companies are doing great with earnings, right? But they've been doing fantastic because of the rate cuts that they said they were going to do and they said that we're going to have, and the fact that the economy was doing just great and the companies are doing great. So everything is green. Now, of course, since December, as you could see here, we've been suffering a bit and the trend is down below the 50 moving average. Why is that? In fact, at this point here, we had an RSI, as you could see at the bottom, of less than 30, which means it's oversold. We hit this thing here when basically the Fed said uh, 2 versus 4 cuts. And since then, it's been a disaster. So, what we're going to do here, we're going to trade this name on the way down. Why? Well, because the economy is hot. The economy is going to grow. And frankly, it doesn't look like they're going to do some rate cuts, or at least not as many. Now, keep in mind that from a credit perspective, everything is very good. I just want to say one thing. From a credit perspective, okay, from a credit perspective, we're doing fine. I mean, this is important for you to realize that from a credit perspective, we're doing fine. The problem is, from a price perspective, we're not doing fine because the market wants more rate cuts. And every single item that points towards a strengthening of the economy is gonna force the stock market to drop, to push the Fed to do something. That is crazy. We have a great economy and we're gonna have a sucky stock market. And that's what the market is about. It's about telling the story. Okay? So let's keep that in mind. All right. So let's go back now to our friend QQQ and see what can be done and how low can it go. Okay. Well, QQQ right now is at 505. It was down a little bit yesterday, but then it was back up again. Okay, how low can this thing go? Well, as you could see, if you study the pattern, of the 50-day moving average. We have basically been hugging this thing all along. And whenever there is a departure from the 50-day moving average, at least since September, it has kind of stayed above it. Now we are starting to trend down. Now, are we oversold? Well, let's take a look at the RSI. As you can see, the RSI right now, it has been it is low. It could go lower. Okay, it has been lower in terms of an RSI, right? So it has been around 37, 38. This is approaching 42. So there's going to be more to go, and we'll see this morning what happens. Okay. We'll see what happened with the PPI. Okay, so let's monitor this one very closely. Now, in terms of the news, you see, as you could see, the news really are tying very closely. Here's what the top ETF to buy right now. That's Motley Fool. Why rising bond yield is such a problem for stock? Um, Now, obviously, it's a problem because you're competing with that yield. Okay, and the yield is getting pretty high. Okay. This morning, two key inflation. Let's take a look at this. Two key inflation prints await investors as rate fear rattles the market. What to know this week? I mean, this is a story, so you better get on it, okay? A hot December job report capped off a week in which investor concerns over higher for longer interest rate drag down stocks. Higher for longer, that is the key word. The S&P 500 and the Dow down by 1%. The biggest concern driving market is that inflation does not continue its downward trend towards the 2% target. Two key reading were agreed this week. So that's the one that we're talking about. Tuesday, which is today. Today will bring a reading on a wholesale inflation before the more widely followed consumer price index set for Wednesday. So the market is all a bated breath on this thing. Aside on retail sale, inflation expectation and housing. In corporate news, so basically what we're waiting, the pivot to inflation data showed that the US labor market remains on more solid ground than initially thought. Well, we've been saying that for a while, that the economy is pretty strong. Data from the Bureau of Labor Statistics, inflation just came out. Let's just see what it does look like. We're going to see what the market is telling us. Okay. PPI, 8:30 a.m. PPI. Let's see. Let's see what the PPI looks like. Let's ask ChatGPT. Maybe ChatGPT is aware. What is the latest PPI print? Let's see. Okay, so this is the latest number. The core PPI. So basically, the PPI is down to 0.2%. So it looks like PPI is under control. So that should be there should be some good news here, I think, for the market this morning. And you can see everything is kind of green this morning because the PPI is obviously went from 0.3 to 0.2%. And that's exactly what you want to see. PPI numbers came out. PPI numbers came out at 0.2%, below the expectation of 0.3. So looks like good news for the market right now. So we should see some up in the market today. PPI prior was 0.4, down to 0.3 expected, down to 0.2 actual. Market should like that. As you could see, we have now the PPI in pretty good shape. And as you could see, the Dow jumps 250 points after light inflation report. Literally, we are living and dying by that rate. Stock future rose on Tuesday as investors digested the first of two inflation readings. Futures tied to gain 0.69 point. On the short basis, the market has shifted back to a good news is bad news backdrop. However, it is important to remember that in the long term, good economic news is usually good for equity market as it implies better than expected growth. Fed future trading suggests a near certainty that the Fed will hold steady on interest rate at the conclusion of its two-day meeting later in the month. Markets pricing also suggests an 80% chance of rates staying at their current target range. On the earning front, so it doesn't look like the Fed is going to do much of anything at this point, which is good. Well, it depends where you're looking at where the market is. Next, let's take a look at our portfolio. Okay. Our portfolio, we want to take a look at Tesla. What is going on with Tesla? Well, with Tesla, it's a kind of been a kind of a slugfest here. I mean, it hasn't done much of anything. As you could see, it is on its way down, slowly but surely. Since so the past, I would say since December. Again, when the rate announcement, it hasn't gone anywhere. And no, obviously there's a lot of volatility on Tesla. As you could see, it's up and it's down and it's up and down. But the trend is down. The trend is down on QQQ. The trend is down in Tesla. So you gotta hold on here, people. Especially like I put a put on QQQ. I think I'm gonna hold on to it because the trend is down. There's going to be, I mean, the economy is hot. Okay. So it's going to be tough to justify anything. What do we have here? As you could see, um, Tesla is up 10 points this morning. Why is it up? That's the question. Is Tesla a stock buy or self a sell amid the mid-Trump White House return and Q4 earnings? What does that mean? Well, it means that continue reading. It means that Tesla gained around 63%, virtually all of it in the fourth quarter, especially after President Donald Trump. Now, investors await Trump administration policy, including possibly dialing back the Inflation Reduction Act and the potential easing of regulation. Why not, right? Meanwhile, advanced 1.3 during pre-market on Tuesday after falling as low as 380 before advancing. Meanwhile, Adam Jones, high-profile analyst, increased the price target to 430, keeping an overweight. At one point, keep in mind that Tesla was around close to $500, so it's a pretty good price right now. Jones writes that Tesla recent share price appreciation has begun to discount the expanding surface area between Tesla and physical AI, including the company natural advantage. We will see scope for 2025 will be a year where the market appreciation for Tesla unique combination of skills can be further reflected on the multiple offsetting, right? So the EV giant reported record fourth quarter delivery on January 2nd, but the number came in below analyst expectations. So the company is doing still great. Keep in mind, Tesla is doing great, right? Its delivery was was its highest. It's just that unfortunately, it was below analyst expectation. The market does not forgive Tesla for whatever reason. Tesla expected slight vehicle delivery growth after the company saw vehicle deliveries rise 38%. However, while units sell lagging in the US, so but you have to look at this company not so much, right? You need to take a look at Tesla, but you need to look at Tesla not as a car company. You need to look at it at an AI. I mean, they're still delivering great, but it's just that the valuation is extremely high on Tesla. So you have to be able to look at it as if it is an AI stock, um, not as a auto company. Okay. So the next thing we're going to do is I want to take a look at VMC. I want to take a look at VMC because I like it. VMC, we're going to take a look at through our portfolio. That is here, right? And now VMC is essentially a stock, the Vulcan Materials, that is really all about the um, it's all about the infrastructure build. Okay, and there's a bill in Congress right now to go for that, so that could be interesting. See this? We have a slow descent here. Okay, so take a look. Take a look at what's going on here. Um, and it's been going down, but there's a break. There's a break to the 50 moving average recently. Now the reason you're seeing that is because you see this here. You see the RSI. We have hit the RSI a couple of times here. And the last time we hit the RSI, if I go back at that time, okay, thing is the RSI, the way it measures, um, look, the last time we did the RSI here, the overbought, nothing happened, but we're hitting it quite a few times here. We are really oversold. And that's probably what you're seeing, the uptick. I mean, don't forget, this is a $39 billion company, right? It's not a tiny thing. Um, here we go. Today at 8:30, Vulcan announces fourth quarter in conference call. So the company's going to release its earnings uh, February 18th. So we should see some interesting number. Don't forget, this is a leading building material company in Southern California. And who do you need to rebuild all these houses and this infrastructure that needs to be redone? Okay, exactly. So that could be of most interesting situation here. Look, Vulcan announced fourth quarter 2024 conference call. So we should see some good numbers there. Next, I want to take a look at GCT. Now, GCT, as gone a lot down recently and extremely volatile. It was when as low, it would appear to me, you see, we also hit the RCI right here at the bottom. And then we went from about 17 all the way to 21. I wouldn't trade the option on this stock because it has quite a bit of uncertainty tied to it. The bid and ask on the option is too wide. So this is a stock play here. We went from around $16 all the way to 21 down to 19. This gets back to 17 and it's time to get in on it. You see this? I mean, this is the lowest it has been. And this is, unfortunately, it's a small stock. GCT at $19 is going to be interesting at $17 because this is a small cap play. The P ratio is 6 to 5, ridiculous. It is oversold. So take a look at GCT. If it gets close to $17, it becomes interesting again. Right? So we could see where we are now. 16, 17. We shall see. And that's it. Right? So what do? We learn about what the story is. The thing is, this morning, how would you know? How would you know what the number is going to be? Was it going to be 0.3 or was it going to be higher? Well, it was lower. Though if you bet for the market, you were wrong. Because what's going to happen, this means that the stock market is going to go up based on that news. Let's see what happened to CPI. I have a put on the QQQ. So what I want is I want the economy to do great and I want inflation to go up. Okay? We'll see. We'll take a look at the CPI tomorrow. That's a bigger number because that's what the number that the Fed lives and die by. Now, I'm seeing the trends, the QQQ trends on the way down. I don't know. Usually it trends down. It trends down for a while. And the economy is strong. Be careful. Of course, you cannot be emotional. You cannot say, "Oh my God, I didn't do right, so I'm out." No, no. You just, you took you took a bet, and you're gonna hold on to it. You gotta wait to see what happens. And that is a secret of trading. You need to have a discipline, and you need to have a view, and you need to understand what the story is. Will you always get it right? No. But you hope that you're more right than wrong. Now, can you keep being right and right and right and right? That's the question. And that's the difficult part. Because the market, unfortunately, the market looks at it. And when I say the market, imagine it's a collective, right? It's a collective bunch of people thinking and acting, human being acting. Human being tends to be very emotional. So with this emotionality comes the fact that, well, what's the first thing that comes up? How do they make a decision? It's not AI yet. It's emotional. Therefore, the story is important. Um, what drives this market? Now, obviously, the market does want lower rates for obvious reason. Is that from a pure financial standpoint, the lower the rate, the higher the valuation. So therefore, you want low rates, but yet the economy is doing great. So you have to be careful. At some point, the story is going to shift. Okay, but right now, this doesn't appear to be. It's going to take a while before it shifts back. Probably after the Fed meeting, and so there's still a lot of uncertainty, and the market feels very heavy, very heavy. And on top of that, now also the market, don't forget, we are banking on having some good earnings. If on top of that earnings start to disappoint, and we'll do a video on that, then things are going to get worse.